Good evening. This is the Elliott wave update for the S&P 500 for Wednesday, October 13th, 2021. Another great, interesting day, and actually an extremely profitable trading day. There was so much volatility going in both directions and just as fast that at several points today, you could have been down what I would term ugly. You could be down a lot, and then you could turn it. So you could be up a lot, then down a lot, and still end up a lot. There was that much volatility and that much trading to be done. So let me kind of dive in, because in actuality, it has not changed the picture yet. I have to continue to keep both views that I have, the preferred and the alternate, which I've laid out both, in mind, because they still carry the equal amount of weight for probability. So weighting on a probability scale, it's equal. Each one 50% can go either way. So let me open this up a little bit so we can take a look at what actually took place today. We initially started heading like we were going to break below 43.17, with that low coming in at 43.18. So this thing got real close. And if it would have broke, it would have left this as a three-wave up to that point. And as it turns out, it still is, but now this A, B, C, so A wave, B wave, C wave, still can be enforced, still can be happening. We still can call it a B wave, maybe. I'm really losing faith because, and I'll tell you why, each time these buyers move in, I mean move in, you just sit and watch it. Here comes another tranche that they're buying. Here comes another tranche that they're buying. And I measure it by the size of the number of issues that are trading in one direction, as reported via the tick ND and the tick RL. And you're seeing sizable baskets where it'll be like 1,000 issues, 1,200 issues, 600 issues, then another 600 issues, then another, they keep putting in wave after wave of buy orders. Every single time it's been rejected. I mean, if we really take a look inside of this move, you're going to see, this is on the hourly chart, and you'll see, look at the tails that were created on this thing. They run it up, boom, immediately sell it down, boom, and then did it twice. Then what did they do? Turn around, that turns into a bottoming tail, turn around and just race it, still with a little bit of a bottom tail, a little bit of a topping tail, same thing, and then run it. And each time it was rejected. And it's telling you that when you look at the tails, where it went from, to, and then back. So there was a ton of volatility. And that really does tell me a lot in terms of this truly is a huge tug of war. And it's a tug of war between the people that are going to buy now in advance of earnings, and the others that are trading more on the CPI figures this morning, and the brewing brouhaha that's happening in the dollar, and what is kind of sitting out there waiting to happen. They were willing to get out here, et cetera, et cetera. So we've got a huge tug of war. This tug of war will resolve. One or the other will be declared the winner of this tug of war. And again, it's a 50-50 shot that we run up and complete a larger B wave. Now, if this is the A wave and this is A of B, B of B, and now we're in C of B, it's in the same position it needs to go. I think it's kind of needed to do that yesterday, but instead it came down and put a new low in and then raced to the moon and still didn't make it out of orbit yet. So it's still orbiting. and it cannot break out of the gravitational pull to pull it back down. Very good analogy. That's pretty much what the market is doing. It keeps getting pulled down back to the mean, back to the center, and then they blast. They bring in that thrusting force and push it back up, but it can't break Earth's gravity. So it can't break the bear's gravity to pull it back in. So we have to give it a 50% chance it will. Because again, once I'm needing this market to really break back above 4,400, to be honest with you, but I would take 4,480 at this point. Actually 4,470. And at one point today, gee, it looked like that's where it was headed. It got to 43, almost 65. I would need 4 more bucks to clear that, and then I would have been in a much better frame to say, yeah, I see this move happening. But it was met with total rejection. So I don't know. So what we need to see, again, upside, it needs to break here. It needs to start breaking higher. It needs to form the wave and not be hit with wave after wave of seller. Just the buyers are in control and the buyers stay in control. And this exact same thing has to happen to the downside. So far, actually, we are still in a box. One great big box that started on Tuesday's Globex. And then that's where we've been. So here we are on Wednesday's close and getting ready for what will turn into Thursday's Globex session in the exact same position. What do we do? Well, they're either going to buy it up, but I mean, they have to start buying it and push further. That normally has been happening when Europe opened, when the European markets open. They're the ones that have kind of been taking it to a low and buying it off that low up until our opening, which pushes us higher. So we see that again, maybe we get to break up. And if we break up, we know what the drill is. It does not necessarily have to break that high, because I can continue to call this a sub-minute 2 all the way up to that level, 4407. And look at this internal trading. It's just chop garbage. Tradable on a 1, 2, and a 5-minute chart, but it's choppy garbage in terms of telling us what we can look forward to moving forward in a day, moving forward in a week. We've got all kinds of calls, but right now you can't make it. So how do I have to leave this? 50-50 probability scale that the bulls will keep control and they will begin to push above these resistance zones. They have failed to break resistance that they need to break to prove upside. So they're still within the confines of a turn and bearish move. Okay, to break out of that, you got to start breaking above 4370, and then again 4380, heading up to 4400. That's where it needs to go. And then that becomes into play. A break above 4407. That's what needs to happen to change the picture from more bullish over the very near term to from more bearish over the very near term. That's how high it's got to go. It's got to break. There's a lot of work, and just feel the resistance that they were getting today. So I'm like, well, I'm not sure where you're going to get the money, because every time you pump a ton of money into the market, somebody says thank you and gives it back, sells it back out. So they're putting money in and somebody's taking money out. Everybody's happy. But if you're a buyer, you need this to go so that you're getting your money's worth. Okay, so 50% chance that it goes up, 50% chance that it goes down. If it, and either way, it's got to break out of the box. So when you're trading, you just really have to trade on a small term chart. This is the 5-minute chart. I'll go back out so I can put that up in. So I'm going to put this into a 5-minute chart so that we can take a look at it. Now I'm going to blow this up and it'll be even more. Now, here we are today. And that, so I can get my times right. That's our opening, excuse me. And this was our opening. And then we immediately sold off. Great trading. See the bars, great trading. These are all good trades, but these are 5-minute bars. So that's how quickly you have to stay open. You have to stay open to the price action that the market is telling you. This was, it was really intense. It was 35 minutes of pure buying. Each time it was met, boom, didn't work, didn't work, didn't work. And we just let it go. And even that, and then look what happened. The FOMC minutes were released. This is things that have already been reported, but look what they did. They ran it up 12 bucks and then immediately dropped it and then did it again and then did it again. It was, and then just said, no, we don't like them. So the volatility just really produced some incredible trading. This one in particular, this was like they were going to take this no matter what. And then somebody walked in and it went bubble. So if you carried that short, thinking, okay, I'm going to look at, because at the time, the technicals were showing that we probably should get a little bit of a turn. Everything was in alignment that we should get a turn, and it wouldn't do it. So finally, just one big move. And then they immediately brought it back up and brought it back down. But I'm just kind of, what I'm trying to demonstrate is that there's plenty of volatility that you can trade it, but you're not going to get any clues as to, gee, are we going to trend other than what you can see in front of you? And then again, you're using your Fibonacci, you're using your moving averages to help guide you through this maze. So on a little bit longer picture, nothing happened. But in between, it was glorious trading. It was a very profitable day in the S&P and in the NASDAQ. So again, for tomorrow, if it's going to break higher, it has to get on the move and get above 43.70. Okay, it has to get above 43.70. Go back out the hour. I apologize. It has to break above 43.70 right here, and then continue just to head higher. It's not impossible to do. The market certainly can do that. The buyers certainly have that push. Yes, it is possible, but it has to be sustained. So what we're running into again, what we run into now, the buyers come in, they do take control, but maybe for 35 minutes. And then the next 35 minutes is having it all taken back. That's great volatility for day trading. But as for trying to build a little bit of a near-term picture, difficult. So we're in the same place. We can go up, we could go down. You're going to use your moving averages. You're going to use the resistance points that we have in line. You can replace the others by running up to the top of wave 2, coming down to the bottom of wave 1 and up to the top of wave 2 to get downside projections for a third wave if the market flips and starts to break, particularly if it breaks below 43.16. That would be pretty good. And it got close there as well today. It got to 43.18. That was the S&P. I already said that, excuse me. Got close. And if it would have broke, then we're heading below that. And I would have said, this is done. And now we're going lower. And I believe the market knew that too. And that's when the buyers stepped in and they just had to, they took back the control. So both sides, if the sellers are intent, then they're going to have to knock out the buyers that are going to step in at that level. So they have to be able to overpower them the same way as the buyers need to overpower the sellers at the highs. So task at hand. I'm going to leave it there. Trade smart, trade what's in front of you, trade according to what your moving averages are telling you, use all of the tools that you have. Don't over accessorize a chart. I like the moving averages and just my fibs and a bear count, but on my trading screen, this count is only as on a different screen, but I can reference it and check what the moves are like. This right now is being left right now as three-way move, corrective, wave 2. That's why I'm not changing the labeling right now. And I will, if it breaks, I'll be the first to take this off and change it. But right now, I don't have a reason to. The market has not shown me, it hasn't broken anything yet to tell me that anything is wrong. All right. The next update will be tomorrow, Thursday the 14th.